All right, good morning, ladies and gentlemen. I'm back with another edition of the Wednesday live show. It is February 24th, 2021, and lots of wild action in the markets to talk about today, some other interesting things, and we'll jump right into it here. First thing I wanted to mention, as you guys probably know, is that we are down to only two open trades. Two open trades. MOH and Exxon Mobil, XOM. So that's kind of interesting. Both actually have pretty respectable gains. This Exxon Mobil is really amazing to me because, but then again, we've seen oil go to make some pretty significant moves. It was up over 60. I haven't looked to see what it was this morning, but hovering right around 60 bucks a barrel. Oh yeah, it's up 62.76, and I'm sure you've noticed the price of gas at the pumps is up too. But before we jump into all that, I want to take a quick look around the indexes here. Starting off with the Russell 2000, which so yesterday was a really wild day, and I know you guys know this. Lots of weirdness in the market on the basically from pre-market until after hours, the S&P futures were like down from high to low, was like down 100 points, up 100 points, basically in so far this week, which is kind of crazy. And so there's a lot of volatility intraday. We're seeing the ranges pick up and the swings sort of picking up, and then the market goes one direction. And was it Monday? I think it was Monday. The market like rallied all afternoon, and then at the very end of the day, it sold off, right? And so what's being attributed to sort of the increase in volatility that we're seeing is rise in interest rates, right? And so, yesterday the market really sold off in the first half hour and then rallied back to kind of where it started, and then it just, Powell was testifying, and then the market just after he was done just rocketed higher, and so we're seeing lots of craziness. Um, Certain stocks are having crazy intraday swings. A lot of tech stocks. Some tech stocks sold off yesterday and never recovered. A lot of stocks did recover, and so it's things are getting a little jiggly. But so you can see on the Russell 2000 here that the gap down, intraday sell off, and then the recovery. And so far today, but this trend line never got violated. Even if I move the trend line up to be under these lows, this is probably, out of all the indexes, this one's probably about the most well behaved as far as trend goes. So, the thicker, if I could draw this trend line real thick like that, it would seem more reasonable. So, the Qs, however, the NASDAQ 100 broke their trend line. Let me get my chart here. Let's see. I got a chart with, there we go, the 50-day moving average. That red line is the 50-day moving average, and interestingly enough, the Qs hadn't been below the 50-day moving average since way back here. I guess this was what, the beginning of November. It was the last time that they actually were below it. And just for, you can see like these dips that we had late last year, last fall, briefly took it under the 50-day and it recovered right away. And so I don't know. The 50-day moving average is something, but just because it dips below that doesn't mean it can't come right back. But it is something to watch, and of course the slope of it's important too. Let's look at the S&P here. You can see still hanging above the 50-day. Let's see what else I got here for my charts. 200-day on this one. I have a bunch of different different layouts here. Things I like to look at the RSI. RSI kind of rolling over a little bit here. But let me go back to my go-to chart here, which is real clean, nothing on it, no indicators, right? It's actually my favorite chart to look at because it's just a price action. So, um, market took a little dip down towards this rising trend line, and then it recovered, right? And actually closed a little bit higher after being down significantly intraday in the morning. So, but I mean, typically the last time we saw something similar was back here, right? Look at the symmetry, sort of the symmetry between December 21st and yesterday, where you had that gap down and then a little push down towards the trend line and then recovered. And then you can see what happened in the next few days. So, but anyway, it's days like those, it's days like, and there's only a handful of them. I mean, here's where the beginning of the year starts, and so we've had a handful of long range days, yeah, maybe 4 or 5 all year, which is kind of crazy. But this one back here was kind of similar, and so you just wonder if it's a shakeout. It takes out a lot of stops. See, that's the main thing. So anyway, regardless of the indexes, individual stocks have just been all over the map, and that's something to take into account there. And of course, that's what we're dealing in is individual stocks, and so, but the market itself seems to be sort of hanging back, but if yesterday was sort of a taste of what's to come, then things are going to get a little bit more interesting here. So last Friday was options expiration day, and the market likes to kind of there's Friday there. I mean, we were right up at the all-time highs practically, and so the market tends to like sort of hang around a certain level on options expiration day. It's like within a few points, I think S&P 3900. So anyway, so all the rising trend lines are basically intact. Tech stocks are something to. Let's look at the XLK here. XLK, boy, this is sort of an interesting chart. This is just a technology spider ETF, so you can see it's got that's kind of a crazy pattern right there. So obviously on something like this, thing to watch is these support levels here. You got a slightly higher low than back here. So if for some reason we sell off again, and of course, I think it's going to depend on interest rates. Oh, check it out. Fed Chair Powell to testify on the economy. So this is a 2-day testimony. So yesterday was kind of interesting. Boy, he has a really sort of a fine tightrope to walk. He can't spook everybody about the economy being bad, but then again, he has to justify all this Fed intervention where they're buying like $120 billion a month in bonds and pumping a bunch of liquidity into the system. So if he says something wrong, that can really sort of tank the market. Yesterday they asked him if assets were in a bubble, and he dodged the question, which I thought was kind of interesting. I forget exactly what he said, but he said something like he didn't have any opinion on the subject or something crazy like that. So, um, it reminds me of the old Greenspan irrational exuberance comment that back in the dot-com era that really spooked the market. So anyway, all that aside, let's take a look at. I want to take a look at the open trades, and then we'll talk a little bit about some of the recently closed trades because we had a pretty good batch of swing trades that were open. And of course, heading into earnings season, I think we had one or two that got closed ahead of earnings. Actually, just one, and other ones that got taken out yesterday on that big gap down in the morning. But let's look at these two to start off with, MOH and XOM. These have been open ExxonMobil's been open since the beginning of the month, and quite frankly, quite frankly, this can be a really super boring stock periods of time, but ever since, and you can see like back here, there's not much going on, not a whole lot of movement over a long period of time, which is kind of what I'm used to. But ever since this gap up here, I'm not sure what that was, 11.9. It's a pretty significant gap up for this stock. Beautiful chart patterns, really nice sort of stair stepping higher. And then of course there was this consolidation period here. That's really pretty interesting too, the way it stair stepped higher over here and then sort of went into this sideways consolidation and broke out of that. And anyway, this most recent sort of sell down, this sell off here from mid-January to the beginning of February was deep enough and enough of a pullback to put it on our list of potential swing trades. And so you can see what's transpired since. Looking good. I mean, that's a pretty big run for ExxonMobil, quite frankly. It's a very significant move for a stock that, some stocks they don't do much for a long period of time, and then clearly there's interest in this with oil prices rising. And that dividend, we talked about the dividend like, way back when this thing triggered in, um, still pretty significant. And so, not that we're, trading for the dividend or anything, but anyway, as of last night, it's up almost 2% again today, but as of last night, this thing was up 17% from the trigger price. And you can see it gapped up a little bit over the trigger price, but the trailing stop, interestingly enough, took a pretty big ratchet there, right? Like once the price moved up here, then this trailing stop came up, sort of came up to a spot that seemed pretty reasonable, and then this next little move that we've had here over the past week or so, you can see that the trailing stop has had trouble drawing this last night. So it looks to me like this gap up right here, that low was 51.62. So this low was 51.80 on 217. And so as of last night, the trailing stop was ratcheted up to just below these prior lows here. And my guess is that with looks like we got some forward movement today, so it may come up a little bit more tonight. It's hard to tell. I mean, the system calculates all that based on the ranges and based on the forward movement away from, the prior stop. So I guess a lot's going to just depend. So it doesn't just ratchet it up like, nickels and dimes at a time typically. Now, sometimes it will. You can see here that like basically right after it triggered in, within a couple of days, the initial stop, which was at the bottom of this pattern, this pivot low right here, initial stop moved up. And so that's kind of the idea. I've gone over this a lot of times, but the idea is that the stops are designed to keep us in through normal price fluctuation, normal volatility, while at the same time, you'll see them ratchet up sometimes, even to try and get to break even. And even if the stock's, not ripping higher like this, they'll still ratchet up just to basically protect the position. So when we look at the closed trades, you'll see the benefit of that. So anyway, so far so good on ExxonMobil. Great chart pattern. Everything about it looks pretty good. Now that stops up here, everything's looking pretty good. And of course, it's went right through the target. And let's move on to MOH, which is kind of a funky looking chart because of this, but you can see there was a trade back here towards the end of the year. So let me zoom out to get rid of that. Yes, pretty nice little little sell down that happened, and then change in trend, and so far so good on this. This has only been open since back over here. So 2, 4, today's day 7. You can see the target way up here. Seems like it's way up there, but as we saw last time, um, yeah, one big day, one long range day up, and this has had a few long range days on the chart. So so far so good on this. Trailing stop is just now beginning to move. I would expect, just based on sort of my observations or what I know about the way the system moves the stops, I would kind of expect this trailing stop to ratchet up again after the update tonight, because it still seems like it's hanging way back there. But anyway, it's a function of price and time. So far so good on that. And interestingly enough, that's it for the open trades. And so you guys know that I've talked about like the price cycles in the market and how the system sort of uses the cycles in the market. And what happens is the market sells off, a bunch of stocks start stacking up on the pending trades, right? And then when the sell-off, is over and the market starts going back up, then the pending trades start triggering in, and then we end up with, a decent list of open trades. And then when the market starts to weaken and or we see some sort of sell-off like we did yesterday, the just the function of, it'd be like if oil starts to sell off, right? Then obviously, and this peaks out and starts going back down, obviously, it's going to tag the trailing stop. So everything sort of, just by the way it's designed, is running off of price cycles, obviously on individual stocks, and the market can be really disconnected from what individual stocks are doing, right? And especially right now, it seems like everything's in its own universe, right? A lot is based on sector. We've seen like the cannabis stocks, rocket higher and then tank, and the EV stocks, electric vehicle stocks. So, and energy stocks are pretty strong here, right? Energy has been sort of the stealth leader. I won't say leader, but energy stocks have been really strong with the price of oil going up. So I like to look at XOP as opposed to XLE because it's much broader sort of ETF representing energy stocks. But so everybody's talking about technology and electric vehicles and cannabis. Let's look at cannabis ETF there. Let's see, there's a bunch of them. And the other thing, Bitcoin too, right? There's one of the Bitcoin stocks. So man, everything's just really gotten sort of crazy, but everything's been defined by its own little sort of asset class. Or asset class. What I'm trying to say, like sector, sectors, asset classes. But yeah, it's been pretty interesting, really. So we had some decent technology stocks on the open list. But so let's real quick, let's look at the closed trades that have been closed here recently. And Jeffrey sent me some stats last night, I guess, where he was looking at these recent closed trades here, and he had some interesting data that he told me about that I'll let you know what he said. So anyway, Square. Let's take a look at Square. The funny thing about Square is it was just, wow, look at that. Square had a fantastic move. There was a trigger price down here at 227. And you can see the progression of everything, but went right through the target, got really sort of volatile up here, and then this was earnings day. And as you know, so they released earnings after the bell yesterday, and as you know, we close open positions at the open before earnings are released. So like since they were releasing earnings at the close yesterday, we closed the position out here at the open, which was actually below the trailing stop, but it is what it is. And so you get a day like yesterday, and that really affects things. I mean, that just sort of that kind of fouled up the actual gain that we had in it to some degree. Now, it was still up 9.1% based on yesterday's open, based on the trigger price in yesterday's open. So that was pretty respectable. But as you can see over here, let me move this over a little bit so you can actually see it the way my screen's set up. So this max price right here is basically how far it ran after how far it ran from the trigger. After it triggered in, like what was the max distance that it moved. And part of the reason that's important is because some of these stocks, and there's actually an example here, right? The second one, this FATE, this thing went up and it blasted through the target. And at the target, you would have taken at least partial profits, right? We've agreed that you take half the position off the target, or you can take all of it off. But you can see that what happened was, and we'll look at that in a second. But basically, what I'm getting at here is that we've included the max distance that it moved just to give you an idea of, well, just so we have an idea of what the potential was as far as the moves. I mean, we want to know, and typically, you're going to see obviously a max price that's much higher than what we actually got out at, because a trailing stop is designed to sort of hang back, right? So anyway, long story short, I think this so the FATE, FATE is actually the one to. There we go. This is so when you're looking at these stats, keep this in mind that if the max price is higher than the target, right? Then that means it hit the target, and so this is not necessary. All this is reflecting like the minimum gain. That's the minimum is reflecting the price at which it hit the trailing stop as compared to the trigger price, right? So when you're looking at these stats, keep that in mind, because FATE made it through the target, so one would have locked in some profits there at 115, and let's see the high. What was the high there? 118.14. So that would have been basically, the high of this bar was the max price, right? This max price column, 23.1%. That would have been the distance from the trigger price to this high. And interestingly enough, so the trailing stop basically moved right up to the trigger price, break even, which is what we want to see. I mean, ideally, once trailing stops at the trigger price, well then, we're at break even, give or take a little bit, accounting for the gaps. And so that's what you want to see. But anyway, so that's why, you have to sort of understand how everything works in order to analyze these particular stats that are shown on the close trade page. But so there's just one of those weird cases where the stats are basically going to show a 0% gain or loss on this particular swing trade, but in real life, there would have been some profits taken there at the target, at least half. So anyhow, so let me throw these stats out here, because when Jeffrey did the update last night, he did some analysis, which is kind of interesting, and I'm assuming that he's using year to date on these stats here. And so what we really want to see here is is kind of focus on this minimum column, right? Because if all you did was, enter around the trigger and set your stop at where the trailing stop is, that would have been the minimum gain. So that does not include selling at the target. Doesn't include taking half off of the target. So it's just the way that he decided to parse out the data when we originally created this system, because it's all mechanical basically. Um, so one interesting thing that he came up with was, he says, it appears that when a stock hits a 50% gain, it's best to take it. And so I'm guessing that these two right here, Lake and the mRNA, you can see that those are the two that had over a 50% gain at one point, like when the max gain was 50%. So he says that and you can see this particular one, this mRNA, it was up as much as 55%, and then it came down and hit the trailing stop at 23%. So let's look at that just for the fun of it. And so real quick, let me just look at something here on my other screen. The trailing stop was 148. Yeah, so the trailing stop was basically got tagged right there. Maybe it was this day here. Yeah, it was. I'm sorry. It was this day. Tagged the trailing stop right there. That's what I thought, because otherwise it would have come up here. So anyway, long story short, at one point it was up 50%, and what he's saying with his analysis is that once we have a 50% gain, it's best to just lock it in. And so I think going forward, what he plans to do is basically set the stop to lock in anything that goes up 50%. And so, but the real crux of all this I'm getting to here, he says the average return if you played all the symbols in equal size and just took profits on the normal stop, but took the 50% when you had it, works out to 7.8% per trade. And that includes all the trades, winners and losers combined. And so that little modification there that I'm talking about, this one was close too. This Neo, really close to 50%, and you can see also that the system, basically gave back half of it. So let's look at that one too. So I think what he's getting at here, and it sort of makes sense too, right? And of course that's where the parabolic stops also come in. Is that you get a stock that basically has a 50% gain, and keep in mind we're swing trading here, right? It's kind of short term, couple of weeks, a month. Some of these things are open, and so excuse me, if a stock makes a 50% gain in the context of a swing trade, then we're best just taking it off the table, because what happens here is this. You get almost a 50% gain, and then typically that's going to be an unsustainable parabolic move, and then it's going to come back down and knock you out. You're going to give up a lot of the profit. So, but that one doesn't actually count in the stats. So the stats that he's well, I won't say the stats, the calculations that he arrived at analyzing the closed trades so far this year is that anytime that you have a 50% gain, just go ahead and take it, right? And if you do that, then averaging out all the closed trades, it works out to plus 7.8% per trade. So he says the moral of the story is if folks just follow the trades mechanically with equal size, they can expect 7.8% gains on the money employed over time. Money employed over the series, meaning that you may have 50K in your account, but over the course of the year you trade it with 6 times that amount. So because obviously you've got a cash position, and we're playing in and out of these particular stocks. So That's all based on the stats so far this year. So the other thing to notice here is compare, when you look down the column. Now, of course, there's a couple of these got knocked out just because of the volatility in the market with small gains, obviously. But if you scan down the minimum column, you'll see that the stop outs are relatively small compared to the gains, right? So, you see the first one minus 2.2%. Let me see, make sure you can see that on the screen. Oh, let me go down a little bit here. Yeah, so this right here, this minus 2.2%, small stop out, big gain. Small stop out, relatively small stop out. So to me, like a minuscule stop out is like less than 5%, especially with the volatility we're seeing in individual stocks. So this 6.2%, that's still a relatively small stop out when you compare it to, you come up here and you compare it to some of the gains. So that's sort of the thing to focus on. And so obviously, you want more winners than losers, and you want your winners to be bigger than your losers. And so, if you look over here, this basically, this is sort of the last batch here. We had quite a few open trades, and you can see that there was some extremely respectable gains, and the stop outs were relatively minimal, right, in comparison. And so, anyway, that's kind of interesting because that's based on like what's going on so far this year. The system is averaging 7.8% gains, right? Over a longer period of time, that's actually going to be significant. So, okay, real quick here. Been trying to keep the shows a little bit shorter. Let's take a look at let's just take a real quick look here through the pending trades and see what looks good, right? That's always fun. Now that we only have 2 open swing trades, now we're looking to see what's setting up for in the future. Okay, so keep in mind, right? Keep in mind that these pending trades from the top down anyway are they're just beginning to set up, right? And so we've gone over this quite a few times. The trigger price on this one is, I like to do this. The trigger price on this is up here right now. So I'm gonna put that there, right? So like what happens is this hit the list on 223, which was yesterday, it looks like. So it starts off, the stock's in an uptrend. It starts to sell down. It hits the pending list, and the trigger starts way up here. And so here's the idea, right? The idea, I'll go over this again, is that, it sells down there. It continues to sell off a little bit. And let me just draw like a real crude sort of trend line here. Right. I'll just go over this, real quick here. So, maybe we get a bounce up to, maybe the price like sort of bounces up, and hits that trend line there, and then, it sells down more here. And so what's going to happen is this trigger here is going to, as time goes on, it's going to work its way down, and then theoretically, and so, everything's based on the price behavior, but theoretically, right? And this is all, and I'm just mocking this up, by the way, but you see me mock these up before, and they actually, sometimes, kind of follow close to it. And so the idea here is that out in the future, this thing could trigger in like down here, right? Or even it could even look like that. And that would almost be better, something that looked kind of like that. And so the moral of the story, my point here is don't pay any attention to the current trigger, especially when they first hit the list, because it's designed to like put it on the radar, but the sell-off is still underway, and so we don't want to get triggered in like right here, on just one bounce day. We want the sell-off to sort of run its course, right? And then maybe the stock, does a bunch of stuff, and then maybe it bottoms out here, and then when the change in trend occurs, then we want to jump in once that change in trend is confirmed. And so that's just basically, another quick um, recap and sort of how the pending trades work. And so, and here's the thing: if for whatever reason, it just tanks down here, then it could just disappear from the list. So there's no guarantees that when a stock is on the pending list that it's actually going to trigger in. And so you'll want to check. You want to check that trigger price because it literally can change on a daily basis. It depends what the stock does. If the stock doesn't make any progress up or down or whatever, then chances are that the trigger is going to stay where it is. So I'm just gonna for the fun of it, because I like to come back and review these each week. And so there's the initial trigger price way up here, and so trust me, it's not going to trigger in up there. So anyway, let's look at some of these other ones. Same thing here, right? This sell-off is just sort of getting underway, and chances are this one just hit the list too, so it's the same sort of thing. Trigger price is way above the current price. As we get further down the list, the ones that have been on the list, and this has only been on for a couple of days too, but as we get on the list here, you'll see that the sell-offs are sort of manifesting a little bit longer, right? So this Gilead's actually looking kind of good here, right? This is a pretty interesting pullback that's underway here. So yeah, Gilead is starting to get closer to potentially triggering in. So we'll have to see. We'll have to see what happens here. So not looking too bad. Decent looking chart. ENPH. Yeah, it's a nice run up. This is kind of a deep pullback here. It's a pretty significant pullback, but hasn't really run its course yet, so there's still a little bit of time here. We want to see them like pull back and sort of bottom out. And if you looked at like the MACD on one of these, you could there you go. So, I mean, ideally, and this is probably not the greatest example. Let's go back to Gilead here. Yeah, Gilead's actually a little bit better of an example, but you see that MACD is still headed down, the price is still headed down, and so this, the cycle is still down right now, and you'll see a lot of times. I'll go back to like ExxonMobil. Look at how it sold down over a period of time, and that MACD, went negative, and then it started coming up, and then as it was starting to come up, actually, before it went positive, like it didn't go positive till way over here, but it started coming up, right? So the cycle was sort of, and of course, it's the system's not really using that, but it's just more of a demonstration. So when something's still headed down like this, most likely not going to trigger in. So, but you never know. I mean, you could have a big push up. Also, this is part of the reason that we use the closing price, right? Because you could have some sort of like a crazy, intraday spike up that goes up through the trigger, right? But not likely to get a close over the trigger unless you're getting an actual change in trend. So that's part of the magic too. So anyway, real quick, let's go through these. We looked at EMPH, not all that exciting. BLDP, this has been a super hot stock. I mean, look at this. The stock, the stock was in the 20s and went up into the 40s, and now it's back, in the 30s, 20s, whatever. So there's a lot of potential here, but this is a pretty nasty looking sell-off that's underway, and so ideally, and sometimes these extremely volatile stocks, they don't behave real well. So, but ideally, we'd want to see, a completion of the sell-off and then a turnaround. So, and amazingly enough, Tesla is on the pending trades list, right? So that's kind of interesting. And this is also sort of, I mean, it's still sort of in the process of selling off, but you know, I I look at yesterday's sell-off, right? I mean, yesterday's range and just sort of how it manifested, and that's really sort of, that's a potential pivot low, sort of a capitulation type move, right? And so you'd almost have to look at this on a log chart because it's so crazy. I mean, you look at this and you think, well, I can't. I'm gonna take that off of there. It's annoying me. I mean, if you look at this, that's just crazy because here it was at like basically $900, and yesterday's low was 619. So think about that. And I mean, it doesn't. If you took the scale off the chart, if you didn't know what this was, you'd think, oh, just a normal sort of sell-off. But just for the fun of it, let me put this on a log chart. Yeah, the log charts tend to, I mean, it kind of looks the same really, but you can see by the numbers here that just how dramatic this is. I mean, if you think about it, since November, I mean, this thing went from it doubled from here, 450 to 900. It doubled and then, you know, took about a 30% haircut. So crazy movements here in Tesla. And so this is potentially setting up, right? I mean, this is the type of stock that could basically, what I'd really like to see is just some sideways consolidation, maybe some retesting of the mid area of this. But I mean, if it continues to sell off, then who knows? So it's going to be a really interesting one to watch. And then last but not least is this one that's actually been, this is the one that's been on the pending trades list for quite some time. And so it's kind of, it's had a nice sort of longer duration sell-off, and it's a lower price stock. And so we could potentially see this one trigger in at some point. And out of all of them, like I say, this one's been on the list the longest since the 8th here, or yeah, since back over here. And so this is kind of, and I don't have any idea what these guys do. So it's a little bit unusual. The average range on this stock's 9%, which is extremely significant, right? But if this thing does trigger in, it could make a fairly significant move in a short amount of time. So anyway, all right, so that's all I have there. Went over the pending trades, and now's a good time to kind of, here's the thing, when the market gets a little squirrely, like it has been here recently, it's the perfect time to be sitting on, a couple of big cap stocks like, two open trades. One of them's ExxonMobil. Not going to have any huge surprises there, and already got a respectable gain. And so now we're just kind of, mostly, I would say, on the sidelines, comparatively speaking, and waiting to see, how things play out from here. So, got end of the month coming up and everything. So, anyway, that's what I have for you today, and I will see you guys back here next week.